is right.
Dr. Nadine Hachak-Haram from Proximi. I hope I pronounced that correctly.
Yes, you did. Thank you for that. Good morning. I'm asking this question really with two hats. One, as an NHS surgeon, but also as a CEO and founder of a digital tech company. We see digital health platforms as a growing industry here in the UK, and obviously they offer an incredible opportunity to provide solutions to some of the key challenges we're facing on the front line: workforce, productivity, quality and safety for patient care. What role do you see them playing? But more importantly, how will you support the adoption, translation and scale of these solutions across the NHS?
Well, you know, this is absolutely something that I think has to be a huge priority. It was a big priority for me when I was Health Secretary. I started the NHS app, which became incredibly important during the pandemic. It's a huge priority for Steve Barclay. And what I would say to you as a surgeon is that globally we have a shortage of 2 million doctors, and we need to train more in the UK. But actually, we are not going to close that gap unless we embrace the opportunities of technology, both to help people work more efficiently administratively, so that surgeons don't find that you know, they have an empty operating table because a patient hasn't arrived, but also because technology has a huge role in prevention and stopping people needing to go to hospital in the first place. So I think there's a huge opportunity. I also think there's a huge opportunity here in the UK, because despite the pressures that we see daily in the NHS, we happen to have the world's best digital health record for 50 million people. And if we can use that in a way that allows information to be shared, allows research to happen, we can offer something that just can't be offered by other countries.
John Boomfrey from Amazon.
Good morning, John Boomfrey from Amazon. Chancellor, I welcome your remarks and your compelling vision for the UK to become the next Silicon Valley. My question was on your second pillar of education. What more can government and business do in partnership in the short to medium term to create the right skills environment that's required to deliver this future growth?
Well, thank you. I mean, it's a really important question, and there's obviously a lot that government can do because we're responsible for the schools system. But when it comes to skills and apprenticeships, we can only do this in partnership with business. The apprenticeship programme has been an extraordinary success. The first visit I did as Chancellor after the autumn statement was to see HS2 being built at a junction outside Birmingham, and I spent time talking to an apprentice who was incredibly proud. It was a 4-year degree apprenticeship. She was doing that, she was going to get a degree at the end of it, and she wasn't going to have any tuition fee debt either, and it's really taking off. But I think there are things where businesses can help us do more, and one particular area I think we would like to talk to you more about is what we could do to encourage older workers back into the workforce and also to discourage them from retiring, so more occupational health access to people who have a mental health problem, a back problem, when they are potentially thinking of leaving the workforce. I think that's something where employers can have a really big role. Also, I think when it comes to apprenticeships, there is a sense that apprenticeships are for young people, but there are lots of people who are ready and willing to consider a new career in their early 50s. They're expecting to work potentially for another 20 years. And they might need a slightly different type of apprenticeship, a slightly shorter type of apprenticeship. And I think that could be very good for you at Amazon. It could be good for everyone here. So that's a dialogue that, with Gillian Keegan, we very much hope to pursue.
Right, we're going to wrap it up there for a breakout and networking session, and then we're going to go to our various roundtables and panels. Chancellor, thank you very much indeed for that speech. Thank you for the questions, but thank you for everything that you're doing in terms of engaging with business. Really appreciate it. Thank you.
Thanks, Con. Thank you.
Thanks again. That number on...
You're watching Sky News and you've been listening there to the Chancellor, Jeremy Hunt, delivering a speech at the European headquarters of Bloomberg. Not a great deal of new news in that speech, it has to be said. A lot of rehashing of previous statements from the Chancellor of the Exchequer. It was billed in advance as being an antidote to declinism. The Chancellor trotting out various statistics of economic growth in the UK and comparing them favourably with some of the UK's international peers. Those comparisons, of course, very, very carefully selected, not really making note of the fact that the UK has underperformed all the rest of the G7 countries since the start of the pandemic. Possibly the one interesting new news line in it was his message, his call on people who dropped out of the labour force post-pandemic. Obviously, the UK facing a big productivity crisis, and that has been partly linked to the fact that a lot of elderly or over 50s workers, highly skilled workers, have dropped out of the labour force since the pandemic, getting on for 400,000 of them, and have not returned to the labour force. Jeremy Hunt saying there that he did want these people to come back to the workforce, but there were no eye-catching policy announcements in that speech on how he might be able to entice these people back into the labour force. I guess we will have to wait until such time as he is able to give concrete details on that, and that will probably be in the budget in early March. I can give you some reaction in the meantime to this speech from Rachel Reeves. Of course, she is Labour's shadow chancellor, and she has said Britain has so much potential, from creating good new jobs in the industries of the future to making our country the best place to start and grow a business. Labour's proper plan for growth will grasp those opportunities and make our economy stronger to face up to the challenges. 13 years of Tory economic failure have left living standards and growth on the floor, crashed our economy and driven up mortgages and bills. The Tories have no plan for now and no plan for the future. It's time for a Labour government that will build a better Britain. So that's the reaction from Rachel Reeves. The backdrop to all of this really is something that the CBI and the Society for Motor Manufacturers and Traders have been talking about during the course of this week, which is the fact that the United States and the EU are both now investing substantial sums of money in the transition away from a carbonised economy to a green economy. Joe Biden, the US president, last year passed what he called the Inflation Reduction Act. It's actually nothing to do with with the cost of living crisis. It's all to do with encouraging investment in the green economy. He has put some $369 billion worth of incentives and tax credits towards American households and businesses, encouraging them to, in the case of households, to buy new electric vehicles, or in the case of businesses, to invest in the transition, for example, by building wind turbines and solar panels in the United States. Now, the EU says that is contrary to the rules of the World Trade Organization. It says that that is potentially going to have to force it to retaliate. But in the meantime, the EU is talking about incentives of its own, and we will be getting more from that over coming weeks and months. Well, joining me now for a bit more reactions, Yael Selfin. She's chief economist at KPMG. Yael, good to see you this morning. What did you make of that? I mean, I've said that I didn't think there was any new news, isn't it? Was there anything that caught your eye?
Well, it was a bit unfortunate. We were hoping for a little bit more direction as to where things are going. But as you say, absolutely, it was a bit of wrapping up everything that we had so far, but not enough concrete plans to get us to where everyone wants to get to. I mean, one of the things that I find a little bit disappointing is a bit of a red herring with inflation. Targeting inflation is really the job of the Bank of England. It's not the Treasury. And it's, in any case, something that we think will fade away this year. So I don't think it should be a target for government, or it should be really a focus. The focus should be on growth. And there was not enough there to try and boost what is very weak business investment in the UK and try and help exporters in particular export more.
Yeah, the Chancellor said that he was in favour of low taxes, but it's worth reminding people, of course, corporation tax is going to go up by 6 percentage points at the beginning of the new financial year. I mean, if anything, that's going to drive business investment away, isn't it?
Well, the main thing that is driving business away is the uncertainty about what the actual plan is going to be and part of it is uncertainty about tax in the medium to longer term. And at the moment, we have public finances that are not in great shape, and a lot of things that are being postponed in terms of dealing with that issue and actually trying to rein in public finances. Most businesses are now waiting for after the next election to see what the real direction is going to be. So we are likely to stay in this slight limbo of this period, waiting for the next government, effectively.
Yeah, obviously, I mentioned there that Biden is obviously pump priming in the US. The EU has indicated that they will respond in kind. I mean, we seem to be moving towards an era of greater state aid for businesses, particularly in the energy transition that governments will want to support. What kind of financial firepower has the UK government got against what the US and the EU could potentially put up?
Well, Ian, you've just really hit the spot. We have no finances. We have got very constrained public finances with relatively small economy when you compare us to the US and the EU as a whole in any case. And therefore, it's very difficult for us to play that game.
Yeah, what about this point that the Chancellor made about getting people back into the workforce who've dropped out of it, particularly older workers? What sort of things do you think he can potentially do? What sort of levers could he pull to bring about that?
Well, I think the initiatives around upskilling and helping older workers upskill for new jobs is good. It's a good initiative. How they're actually going to do it, that is the $1 million question, if you like, because it's not that straightforward. They've tried a number of themes. And they didn't work. I think it's very, very important to work with the private sector and try and help them upskill workers as well. But ultimately, I mean, unfortunately, in some ways, we are seeing more people coming back to the labour force now because of the squeeze on incomes, and also their pension pots are slightly more precarious given the volatility in markets. So it could be that we will see more people coming back to work. There's also potential hypothesis that part of that issue is related to the NHS and the waiting the waiting times there for operation, etc. So I think we may see an improvement. And it would be really good if, apart from bringing those people back, as the Chancellor said himself, we can bring those who never came to the labour market as well.
All right, yeah, we have to leave it there. Good to see you this morning. Thanks very much indeed for joining me.
Thank you.
Some other business news stories for you now. And the convenience store operator Bestway Group has bought or agreed to buy a 3.45% stake in the grocery giant Sainsbury's, but says it's not considering an offer for the chain. Bestway, which is the UK's 7th largest family-owned business with an annual turnover of £4.5 billion, said it intended to hold its shares in Sainsbury's for investment purposes and looked forward to supporting the executive management team. It added, Bestway Group may look to make further market purchases of Sainsbury's shares from time to time, subject to availability and price. The chief executive of Direct Line has resigned just days after a shock profits warning wiped out a quarter of the insurer's stock market value. Penny James, who'd been chief executive since late 2017, steps down with immediate effect. Her departure comes after the company unexpectedly warned it would make a loss this year and cancelled its full-year dividend payment due to inflationary pressures pushing up the cost of car repairs and a surge in weather-related claims. Well, trading updates from Direct Line's rivals have subsequently pointed to specific problems at the company. And shares of Superdry have fallen by as much as 17% this morning after the fashion retailer warned that it would do no better than break even this year. Superdry, which had previously forecast full-year profits of up to £20 million, said it had traded well over the Christmas period and said it could see strong demand for its brand across all geographies and platforms. But it warned that its wholesale arm had been hit by the impact of shipment timings as COVID continued to cast a shadow. The group reported a pre-tax loss of £17.7 million for the 26 weeks to the 29th of October. That compared with a profit of £4 million in the same period a year earlier. Well, still to come here on Ian King Live, we're going to have a look at how global markets are doing this Friday morning. I can tell you Sainsbury's have had a bit of a bump on that news. Stay tuned for more.
From now to 31st January 2023, we are offering you an amazing 5% buyer's discount on all purchases on our expandable 1, 2, 3 and 4 bedroom detached homes at Cochrane Villa, Pokwase, just 5 minutes drive from the interchange. The Mayflower and the new Hazel Courts at Kuntusi, 20 minutes drive from Achimatamo. Beautiful homes in a serene and gated community with flexible payment plans available. Call us now on 0544 347 980 or 0544 347 981. GHS Housing Estates. View it, love it, own it. Make that move now, this festive season, to your new home address at GHS Housing Estates. From now to 31st January 2023, we are offering you an amazing 5% buyer's discount on all purchases on our expandable 1, 2, 3 and 4 bedroom detached homes at Cochrane Villa, Pokwase, just 5 minutes drive from the interchange. The Mayflower and the new Hazel Courts at Kuntusi, 20 minutes drive from Achimatamo. Beautiful homes in a serene and gated community with flexible payment plans available. Call us now on 0544 347 980 or 0544 347 981. GHS Housing Estates. View it, love it, own it.
Hi everyone.
By COVID. Change seems tantalisingly close in this corner of the UK.
This is my patch, my specialism. It's also my home.
Well, Wall Street's positive showing last night on the back of better than expected GDP data in the United States was followed by a largely positive session overnight in the Asia-Pacific region. As you can see, Mumbai, which isn't on the screen, that finished lower, but elsewhere Tokyo was unchanged. Sydney and Hong Kong both finished higher, as did Singapore and South Korea. You can ignore the figure for Shanghai there. The market remains, of course, closed for the Lunar New Year holiday. Well, in Europe, stocks are going into the weekend on a largely positive note, or at least they were when I came into... Well, the DAX is unchanged more or less. So's the IBEX in Madrid, the CAC 40 in France and the MIB in Milan. Slightly higher right now. Talking points in Europe include H&M. The stock is down nearly 5% in Stockholm. That's after it reported an unexpectedly large drop in its quarterly profits. Well, here in London, the FTSE 100 is just about in positive territory. It's 6 points to the good right now. The oil majors are lending a hand there to the index. The leading blue chip gainer right now in percentage terms, mentioned them earlier on, it's Sainsbury's. Look at that, the share's up 4.5% nearly on that state building by Bestway, while the Lloyds of London insurer Beazley Group, the shares are up by nearly 2.5%. There's been a lot of positive comment from brokers around the sector this week. Well, outside the FTSE, the online holiday retailer On the Beach is up 8% on an upbeat trading statement, while the car retailer Motorpoint, its shares down some 3.5% following a profits alert. On the foreign exchange markets, well, the dollar's had a bit of a spring in its step after those GDP figures. Sterling off 0.25% against the greenback, off by 1/5 of 1% against the euro. The single currency, meanwhile, more or less unchanged right now against the dollar. As for the oil price, well, that staged something of a rally yesterday. It's held on to those gains this morning. In fact, it's consolidated them. A barrel of Brent crude currently will set you back $88.44 a barrel. That is up just over 1% higher on the session. Joining me now, the head of market analysis at Brewin Dolphin, Janet Mui. Janet, welcome to you. This Sainsbury's news has really come as a bolt from the blue and really put a bit of pep into the share price this morning.
Hi, good morning, Ian. Thanks for having me. Yeah, it is a bit of a surprise for investors and markets. I think it sparks speculation that there will be more interest to take further stakes by Best Way or other potential buyers, because there has been this ongoing consolidation in the UK grocery sector. I mean, we saw that Morrison was taken over by a private equity group, and the Asda Group, for example, is also looking to consolidate its businesses. So, the sector is actually seeing quite a lot of activity there, and I think that's why today's news it sparks speculation of what's next for the UK grocer.
We should point out, Janet, I guess, this is quite an illiquid stock by FTSE 100 standards, because obviously the Qataris have a big stake there. So Bestway might struggle to accumulate the kind of holding that they're perhaps looking for.
Yeah, absolutely. As you mentioned, Qatar is the largest shareholder, followed by Beza Equity Group, which is owned by a Czech billionaire. So, what Bestway said today in the statement is that it is holding it as an investment purpose. It may look to add further stake, but there's no further indication. I think currently what the market is excited about is that there is speculation that it is sparking interest among the investors and potential taking higher stakes, and all this means is that these owners may potentially want to squeeze Sainsbury to unlock further shareholder value, because they pointed out that Sainsbury could do better to improve its operational excellence, so that that can unlock further value for shareholders, and that's why we're seeing share prices rally today.
Now, we're obviously in the thick of earnings season, both here in Europe and in the United States right now, Janet. One that caught your eye is LVMH, the world's biggest luxury goods company. I think they're also the biggest company on the French stock market.
Yeah, it has surpassed a 400 billion euros valuation after the share price increase. Well, it is a very resilient business. It's a very unique brand. It has a very high barrier to entry, obviously, with its luxury segment, and it's very well diversified as well. So, it is slowing in the fourth quarter of last year because of, COVID zero strategy still in China, but it had a record year, actually. And people are looking ahead for this year as China opens up, and already we are seeing pickup in activity in China, and the stores in Macau, which is a shopping paradise, is basically full. So there is a lot of optimism ahead, and that's why even though we saw there is a bit of a slowdown from the fourth quarter, actually share prices are still up today.
And then last night on Wall Street, we heard from Intel, one of the big chip makers globally. Bit of a disappointment, the numbers?
Yes, I mean, people bought too many computers, laptops, electronic equipment during the pandemic, and there has been some build-up in inventories, and people are slowing down their purchases after these huge buying. So that's why Intel, which is a chip maker, they are finding a slower business, and in fact they said the outlook is going to be pretty grim. And this also happened today when we saw the news that Japan and the Netherlands may be potentially joining the US in restricting the semiconductor technology export to China. So, this is just pretty gloomy for the whole of the semiconductor sector, and that's why we're seeing a bit of share price pressure there.
OK, Janet, we have to leave it there. Good to see you this morning. Thank you.
Thank you.
Still to come here on Ian King Live. Doing business in Africa. I'll be speaking to the Chief Executive of FTSE 100 Telecoms and Mobile Money Group, Airtel Africa. It's his first interview with us. Don't go away.